Thanks for tuning into Talking Point. I'm your host, Niraj Shah. The idea of today's conversation is talk to one of the well-entrenched NBFC MFIs in the country to get a sense of how are they seeing the business in the current scenario, especially when COVID-19 cases are expanding, and what the strategy of some of the financial names could be in the times to come. Now, CredAC or CreditAccess Grameen is amongst the largest, or in fact, the largest NBFC MFI in the microfinance industry. Interestingly, it was started as an NGO in 1999 to offer credit to rural women and has evolved over the years as this rural focus NBFC MFI. Let's get in the management. Mr. Udaya Kumar Hebbar joins in right now to talk about his sense of the current business climate as it stands and what the outlook could be. Mr. Hebbar, good having you. Hope all is safe.
All safe, Niraj. Very nice here. Nice to be on your show. I think things are much better when you compare to 4-5 months now. Things are better. Economy is working. The business has started well. We are doing quite well. Our recoveries are good. We are looking forward for another good year again.
Okay, interesting. And we'll touch base upon all of those points, including recoveries,
Sure.
because I do see that your asset quality has stayed up really well in these times. But just one quick question of concern beforehand. Quite unlike the situation in June, Mr. Hebbar, the cases are now spreading across rural India, unchecked almost, so to say. And we've seen global instances of a lockdown reappearing, right? France did that. Israel has done that last evening.
Correct.
And so with micro lockdowns, rising COVID cases, etc., could things turn a bit, even for a short while? Are you sensing that from the multitude of branches who would be giving you feedback?
Actually, we don't think that is not the case in India. I think India is a large country, and the rural is though there are numbers are going up, but it's well spread across the semi-urban and district center kind of thing. In a rural, maybe the new strategy of the administration is to quarantine the house or very limited space, so that allowing the economy to work. That is what we have been seeing in the rural and particularly the area where we operate. Administration need to work on controlling COVID, that they're doing, but they are actually allowing the business to grow, allowing the economy to run, and also controlling the COVID. I think we have to go hand in hand here, and that is what exactly administration is doing. I think we are not seeing this stringent lockdowns. It may be a localized for a small area or a few houses. That kind can come. That can impact to that particular place for a week or two. But otherwise, continuous lockdown we are not anticipating.
Okay. How has business momentum been like? I mean, we'll come to asset quality in a bit, but first, just the business momentum, because there are a lot of question marks about the sustainability of offtake in the near term, at least. What has been your experience?
Yeah, so business momentum is quite good, but we need to dividing the business into two facts. One is business as usual with your existing clients, what the renewals or additional funding for them, and business coming from new clients. The second part may be little delay because we want to see a little more improved COVID curve, a little more improved area. I mean, what you call the situation, because forming a new customer group means working with strangers, working with new customers. The employees' safety and health need to be ensured. Similarly, the new customers' safety and health need to be ensured. That is why we would take little more time to start the new group formation, whereas existing clients, renewals, additional fundings, which is already started. I can say almost 50-60% of the level of what we have been doing earlier, which already started. While Q2 remains to be normally muted or little low compared to the monsoon and the sowing season, so it stays that way only. My sense for microfinance, Q3 and Q4 are most important. Close to 60% of the growth comes from Q3 and Q4, and we anticipate a kind of reasonable growth in Q3 and Q4. So environment is good, and then particularly Grameen CreditAccess Grameen has sufficient capital, sufficient liquidity. We have opened large number of branches last year, which is available for us to grow. We have very strong workforce available to grow. So we believe we can still grow a decent growth, give a decent growth this financial year too, given the at least 5 months of good year ahead available.
Yeah. Yeah. Well, I mean, I understand your branch expansion strategy as well, Mr. Hebbar. I mean, I think over 30% CAGR for the last 6 years. FY20 saw among the largest branches opened in Karnataka, Maharashtra, Tamil Nadu, what have you. That's the question, really. Would you believe that you would go a bit slower in the current year because of the COVID-19 situation? And where does this confidence about Q3 and Q4 stem from? Yes, historically it would have been okay, but this year might be different, right?
Yeah, this year may not be equal to earlier years, definitely, because you lost already half a year. So that's why to that extent you will not have.
No, just the second half, sir.
Yeah, second half, we believe the kind of changes what we are seeing last 2 months, particularly August and now the September. So the economy point of view, there is openness so that we can operate business. And look at the business what we do. We provide funding for the livelihood of rural economy. So livelihood has to move. Basically, there is a need of local demand, local supply, local purchase and sales for within that livelihood economy. It cannot stop. So there's a demand and there is a supply needed. So and nobody else are doing that. So obviously, microfinance is the go-to for that business. So
Agreed.
and also the rural hinterland. There is nobody supplying money today. If you see, there is large demand there. So if we are able to meet that demand, the growth is obvious actually.
No, sir, what I meant was, I'm sure that the demand is there. The question is the right kind of demand where you would, after assessing all the asset quality probabilities, etc., would be comfortable in lending, because I'm sure the demand is vast and across the sphere. Are you sensing enough high quality demand for you to be able to give off those loans without any issues?
Sure. See, microfinance is a socially collateralized loan. It is actually, you are not looking at a physical, tangible security here. It's unsecured loans what we are providing to the rural people who would come together to borrow with the similar economic conditions, who need a small 20,000, 30,000 loans to manage their livelihood economy. So that kind of loans and the training what we do to them in terms of the co-lending, the joint liability, and the customers watching each other. So which we do not have any difficulty actually. So I think it may not be the as usual previous year growth, but we see there is an opportunity. We see there is an opportunity. We see there is a strong what you call asset quality pattern also, because there is a kind of existing cash flow. Look at the microfinance customers. 70 to 80% are in essential services, which may be milk or vegetables, fruits, agriculture, small literary shops. So this kind of businesses, they need a small working capital. It's very small, and we particularly CreditAccess Grameen, we operate on a weekly collection, weekly meeting basis. The tiny amount they borrow and very tiny amount they pay back, so that they can pay back easily and go for next level of loans after some time.
As I can see from the data that is there in research reports as well and our analysis, Mr. Hebbar, you maintain the asset quality much better than peers and on a standalone basis as well, not just relatively. Absolutely, to your asset quality performance has been rather good even in these trying times. I mean, we've looked at the numbers even in the past crises too, and I think you've done well. What's the sense of how asset quality will turn out in the current scenario?
See, the business of microfinance is not lending business; it is collection business. How you manage your collections, how you build your team, how the team is enthusiastic or their enthusiasm to go and work is most important. It's a people management business. This is process management business. So that is why the way we built our DNA of the organization is to work for the bad time. Important to bad time. So that is why you would have seen every bad time we performed better. So even today, we believe that we will do much better. considering that the customer relationship what you built, employee customer centricity what you built, employee centricity what you built, which will help in the bad time all the time, Niraj. So that is why we believe that this year also, this entire situation, so we will be doing much better. Our estimation of credit cost, which we always talked about, the comparison to demonetization, which is a kind of similar impact across the country, the cashless situation, or customers not able to do their business for some time. So, but there were difficulties also. There was no moratorium, there was no government support in terms of food security or a subsidy or a DBT was not there at that time. But here, everything is available. Considering these two are kind of similar, we believe the asset credit cost also should not be different. Actually, there may be similar to the extent of what we had in Demon, about 3.9% of credit cost. We believe we will be able to manage within that kind of credit cost this time also.
You are saying that's the worst possible number. It will actually be better than that also.
That's correct.
Okay. Just one quick follow-up. This loan momentum and asset quality bit, does the mix in business also have to do part with that? Because as I can see over the years, your rural versus urban has shifted quite dramatically in favor of rural. And I think the MMFL acquisition probably only strengthens that argument. Where do you see that mix? And is it because of the mix that you're so comfortable?
Yes, that's actually, we bet on rural continuously for last 1 decade. Actually, we always moved toward rural. The hinterland, as we move to more hinterland, we will have a much more quality of assets, less number of competitions, and the culture of the customers are very, very good to maintain the credit history. So, and our bet will continue to be towards rural, and the Madura acquisition further strengthens that. So, if you see, given an example, the industry what grew last year, 23% of the clients are new to credit actually. But whereas for Grameen, the new to credit was 42%, which clearly shows how deep we work, how we move to hinterland and work in rural.
So because your parentage is also sort of MNC in nature, I'm just trying to understand, have the lending patterns changed quite dramatically across? And are you doing things differently in India versus how similar institutions might be doing it, or your parentage might be doing it in some other parts in Asia, Northeast Asia as well? Can you give us some flavor out there? Because I read in a lot of reports also that your approach is very customer centric, and I try to think that every business would think that their approach is customer centric, right? I mean, there is no other MFI will say our approach is not customer centric. So I'm just trying to understand what's the difference.
Yeah, I think there is a difference. I think everybody, what we do is customer centric. I agree with you. What difference is the classical way? What we do is customer centric products. The products for the customers every needs, not only income generation, for the education of their kids, the medical emergencies, the repairing of the house, connecting water, sanitation, constructions. For emergencies, for all these purposes, we provide money, other than giving one loan and keep recovering that. Similarly, we provide the facilities in terms of customers' need-based repayment schedules. Like customer can choose the repayment option when they borrow the money, whether weekly or a fortnightly or a monthly, as she feels, which is important, which is not done by anybody across. So, which helped us to develop the kind of customer based on customer behavior, which resulted into very high customer retention, which you can see the continuously over last 6 years, our customer retention is much more than 85%, which is one of the unique situation in this country. So we have some businesses in Indonesia and Philippines from the parent actually directly. Their greenfield operations, which is a typical understanding of microfinance. They learned from here, they went and implemented in those countries, which is also similar kind of nature. So they learned from here and established there. So by and large, the operations is same.
Okay. And would the collection efficiencies be similar across the countries, if you will? Because I do see that unless I'm very wrong, your collection efficiencies for the month of June and July stood at northwards of 70%. So are they similar across? And what has been your collection efficiency in the month of August and the better part of September, sir?
Yeah, in the month of August, our collection gone to 82%. Already
Wow.
we published that data, and also actually, but for Maharashtra was little weak because of continuous more than 3.5 month lockdown has impacted Maharashtra. So Maharashtra collection was only 72% in August, whereas the rest of Maharashtra collection was close to 86%. So we believe Maharashtra will take little more time. So the delay in lockdown lifting is always impacts the business because the continuous lockdown impacts. Other states it was a short-term lockdown and then sometime re-implementation, some coming out. That won't impact much, but continuous lockdown will impact the economy of the people. That is why there was little lagging in Maharashtra. Other countries, Philippines and Indonesia, are doing better. Their collection also similar, maybe around 60-70% at this point of time. They're also moving ahead well there also. So that is what the status here. And September, we expect the further improvement by at least 5%. That is what our expectation.
Got it. Um, uh, now we've spoken a lot about the current times. Just a couple of questions about what the times ahead could be like, right? I'm just trying to think. There's a CLSA report which said that post demon, and I have those numbers with me. The report stated that post demon, the loan growth numbers for NBFC MFIs were very, very healthy for the first couple of quarters. I mean, northwards of 25%. Whereas for banks, it was about 8%, 10%. The industry was about 10 to 15%. Do you reckon, sir, that a similar thing could happen now post COVID as well? Whenever we have the post COVID scenario, we don't quite know when this will go away, but
No,
still.
it is natural. What happens? You have to consider the two period together to see the growth. Actually, there was
Okay.
5 to 6 2 quarters of degrowth has happened or no growth has happened at that point of time. So together there was a growth. Obviously, customer will wait for a borrowing, right? The same thing will happen after COVID also. What happens is the customer who could not take the loan during this 1 or 2 or 3 quarters obviously will borrow in Q3 and Q4 or next Q1. So if you average it out, it may not be the extreme high growth, but if you carve out only the second part, then you can see little high growth. When you average it, it won't be that high growth. That's what I would say. The demand, as I said, demand is there. Supply need to come. Obviously, there will be growth once the situation normalizes.
Okay. So can I ask you, sir? I mean, for the last, whatever, 6, 7 years, I believe your loan growth has been very, very healthy. I would request you to say the number because it's a very high number. And therefore, my question is on a low base, on a relatively low base, clocking in high growth numbers is probably the easier task. At a base
Correct.
that you are at, maybe it might be slightly difficult. But I'm sure you are not looking at this business only from a 1 year perspective. So if you look at 5 years
Exactly.
out, what's the CAGR
Exactly.
that you anticipate you could do?
The last 5 years CAGR growth of business, portfolio was 41%, and customer growth was close to 26% over the last 5 years. The next 5 years, if you want to see, probably the growth would be about 25%. That is what our view. Maybe even the industry view will be same. So we expect the industry to grow by almost 25% CAGR for next 5 years.
And you'd be able to maintain the net interest margins 12-13% for that kind of loan growth on that base as well.
It should be because it's about 12%, not 13% will be difficult. We don't anticipate 13%. 11.5 to 12.2 could be the NIM actually. That is what normally the NIM is. There may be 1 or 2 exceptional years. Otherwise, it should be within 12%. But because you have 10% of regulatory margin available, so plus 1% processing fee here and there. That is why NIM should be around 11.75 to 12.25 based on the quarter. So it is definitely possible to maintain that kind of NIM.
Okay. Just two tail risks before we wrap up this conversation, Mr. Hebbar. One, would you reckon that your contribution or the geographical mix could change? Because as of now, you have some very large exposures to 3 key states, right? Even though you're
Correct.
expanding in others. But even in these 3 states, as I saw in FY22, you've FY20 also, you've opened large number of branches. So would you diversify out here, or would it stay concentrated?
See, it's already in progress. The growth, expansion is in progress, which is actually more than 33% of our branches are in not, new branches, what we opened in the outside branches. Even total number of branches, more than 33% are in the new geography, other than Karnataka, Tamil Nadu, and Maharashtra. So, which will start growing. Last 2 years, the growth was quite good in the non this core bastions actually. So it's continued to grow. For example, the growth in Karnataka or Maharashtra last year was very low, maybe 12% to 15%, whereas Grameen grew 39%, particularly because of Maharashtra, Chhattisgarh, Orissa, and other states. So that momentum will continue. The growth of other states will be much faster than Karnataka, Maharashtra, and Tamil Nadu. With that process, within 2 to 3 years, Karnataka and these states will come down below 30% kind of things. That is why we believe this expansion, what we already installed in all the northern states, will start giving contribution going forward.
Got it. One last question. What is the downside risk of maybe new lockdowns coming in, if at all, or the COVID disruption lasting longer? So you've told me that you'll be able to manage if things are normalized, right? What if things are not normalized and if things take a turn for the worse? What is the downside?
We assumed the intermittent lockdown possibilities. Our answer is intermittent lockdown will be a temporary, because a lockdown can go to 10 days or 15 days. We don't anticipate a lockdown of months together, which once happened initially. So 1 week, 2 week lockdown will not be a permanent problem. It's going to be a 1 week temporary problem for the customers, and eventually they'll come back to normalcy. So our view is we are going to live with COVID, and we are going to live with such kind of small lockdowns here and there. But we saw in the last couple of months. So, for example, Orissa, there was few districts lockdown happened and opened. Tamil Nadu, many districts lockdown happened in July, August, then come back. Karnataka, 8 district lockdown happened for 10 days in August. So those will not impact your business. It will be a temporary lockdown and will not impact. The only, I see the example of Maharashtra, which has a longer lockdown, which has some impact, but it will take a little more time. Otherwise, we don't see any too much risk we are seeing for the intermittent lockdown point of view. Other risk is about the tail risk. We need to recognize that there's some set of businesses has impact, which are ecosystem linked to pilgrimage or a travel destination or a tourist spots, the beauty parlors or dressing salons, transportation. So there are places, some impact. We believe 5 to 7% of our customers also will have little difficulty. They will take little more time compared to others. So to that extent, there will be a little tail risk is there. Maybe it will take 2-3 months more time. So we believe by December it will be near normal. That is what our expectation.
Okay, Mr. Hebbar, good chatting with you today. Thank you so much for taking the time out and speaking to us, and wishing you all the best.
Thank you, pleasure to be here. Thank you very much.
The pleasure is ours. Thank you. And viewers, thanks for tuning into this edition of The Talking Point. I think it gives us some insights into how lenders in the rural area, or the semi-urban area, where cases are actually rising fast, are thinking about business. Mr. Hebbar doesn't believe that lockdowns or micro lockdowns that will come in will have a really major impact on business momentum, asset quality, or collection efficiency. Thanks so much for tuning in today.